If we think about this for a second, a weaker economy typically prompts central banks to ease monetary policy to essentially make things a little bit easier on the economy. And we've got some prints here this morning that shows some weakness in the European economy. Let me show you some of those specifically. When we take a look at French services and manufacturing PMIs, both missed expectations and are below 50. Remember, 50 or greater is considered strong or is considered positive growth in those parts of the economy, whether it be services or manufacturing. And a print below that is considered weak. Well, right off the bat, Europe, German, French readings were just weak. They're all under 50 and under expectations. Then you have, so here's Europe specifically, right? Weakness. PMIs for GBP. This is the UK's numbers. Both missed expectations. Services PMI was at 50, which was below what was hoped for by analysts at 51.9. The way to read this, guys, and this is why I love learning data from the PMI. What does that stand for, and why should you care if you trade Forex or gold, or if you trade indices? Why does this matter to you? Well, this is a really big, important story to the price of gold. I'll tell you why. Weak data. What does PMI stand for? It stands for Purchasing Managers Index. Imagine if you got a surveyed response from a bunch of very important decision makers in the business world in Europe, and you ask them questions like, do you plan on hiring people? Do you see sale orders increased or decreased? What's your outlook basically on the economy? And you took their surveyed response and indexed it, and that's what we get out of PMIs. It's incredibly useful. And what this is showing us is confirming some of the theories that we've discussed on the show, which has been weakness in other places in comparison to the US. What you could also point towards is that perhaps some of the sentiment is also down because Europeans may be a little bit nervous about what US tariffs are going to look like next year. Remember that Europe is a huge trade partner to the United States. And if the US imposes tariffs on imported goods, that could be scary to Europeans. It could be scary to, maybe more so scary to, places like China, et cetera, but also scary and a bit concerning to these places. So there could be a little bit of that negative sentiment, uncertainty building into this PMI read. That being said, we have a very standard response to this. The dollar is up, right? Dollar looks strong relative to the weakness that we're seeing out of Europe in their economic data prints. We can also see a very standard response to uncertainties in economies. Gold is up today. Again, this marks the 5th straight up day for gold. 1, 2, 3, 4, 5 days up. This is why fundamentals matter so much. If I only traded off of technicals, I showed you guys this earlier this week. If you're an everyday stream viewer, I discussed this. I pointed out that this technical level looks really interesting, in my view, for possible sell side if I could get a confirmation from the edge finder. But that second half of my sentence is everything. We did not get confirmation from the edge finder, and weakness in PMI data is a positive catalyst for gold.
Our Black Friday sale is almost over. This was our best year yet at A1 Trading. In 2024, we brought the incredible Chris Pulver in and gave you guys access to all of his trades and analysis through Pulver Alerts. We also introduced our newest market scanner, the Stock Box, whose AI algorithm is scanning each and every day to provide you with bullish or bearish biases on the top stocks and stock sectors from around the world. Not only that, but the Stock Box gives you a behind-the-scene look at what the largest hedge funds in the world are buying and selling through the 13F scanner, so you can keep up with what people like Warren Buffett or Steve Cohen are adding to their portfolio. The best part of all, both of these products are on sale now for a massive 40% off during our Black Friday sale event. The stock box, the edge finder, pulver alerts, and the VIP Discord community, as well as our trading view indicators, are all on sale for 40% off. Again, the sale is almost over. This is the absolute best discount of the year, hands down. So if you want to take your trading to the next level, don't miss out on the 40% off Black Friday sale event. You can find out more in the description below. Again, 40% won't last forever, so take advantage of this huge sale. Stock box, edge finder, pulver alerts, VIP Discord community, and trading view indicators, 40% off right now.
I am still long indices by proxy. I'm long SMH, which is an ETF that tracks a lot of semiconductors. NVIDIA earnings, I would say, were very good. Expectations are just incredibly high for semiconductors in general, but especially the leader, right? NVIDIA. NVIDIA is flat on the day. Google is a stock that I own, which unfortunately took a big hit the other day. However, the positive here for me on Google, I gotta say, is that I did what is called selling a covered call. And if I show you this, if I go to just my options plays here really quick, you can see that I own Google shares, and you can see I'm pretty much flat on my Google shares. I own Google shares at $163.45. But what I did is I sold calls at 175. So with the big sell-off yesterday, the one positive for me would be that these calls are now much less expensive. And because I sold the call, aka I shorted calls on Google, even though I own some shares, I've created a $415 profit, let's call it, with just a couple days left on the option. And I've been doing this a lot when I see stocks that I like or that I own going parabolic. I have been taking it as an opportunity to actually sell covered calls. I did the same with Tesla. I own Tesla shares. I sold a call out until the end of the year, 490, one contract, which means I can make a maximum of $490, and the calls are way out to a 420 strike price, which basically means that I will make $490 on Tesla if it trades anywhere below 490 by the end of the year. If it goes absolutely parabolic, then what will that mean? Well, that will mean that above this price range, up in this area, I will not make any additional profit. Since I own 100 shares over here, and I've sold a covered call over here, what I've done is I've sold the rights to the shares or sold a call up above this level. So any above this price, I do not see any of the benefit, but anywhere below that price, I get an extra $490 of yield. So not bad. But I feel like that's a reasonable thing. I don't really see Tesla making a $80 move by the end of the year. If it happens, then great. Edge Finder, the money spent on the Edge Finder is nothing in comparison to what it can help you make in the long run. Lee, I mean, that's the thing. I 100% agree. It is not going to make you endless money by any means with no effort. But if you're serious about trading and you use it, I mean, I've found so many excellent trades with the help of the data that I'm using in the Edge Finder. It's incredible. It adds confluence, it adds insights. And let's be honest, if data is not easily accessible and readable to you, you're probably not going to look at it, and you might miss a lot of things. So the Edge Finder, with a practical approach, a profitable trader using it, using the insights to the full advantage, it theoretically can pay for itself. So we'll see. We'll see what happens with NASDAQ, S&P, etc. here. Do you know any successful, mostly price action traders with some but little fundamental influence? There's Marco who comes on the show. He's purely technical. He's sent me his MyFXBook, and it's legit. But most traders do not show. This is a rant that I go on once a week at least. Most traders that you follow on social media, they don't show you any proof. And I do, but I don't say it as a way to like be like, oh, I'm better than the rest. There are many profitable traders on social media. They're just oftentimes not the ones you think. They may not have large followings, and they may not be, they're probably not, big flashy traders and people that you see on social media. Most of those people are marketers, right? There's nothing wrong with being a marketer, but what I do find error with, what I find an issue with is marketers. You can be a marketer and a trader. I'm a marketer and a trader. The difference is you've got to show people that you actually trade. And if you can't do that, then you're just a marketer. And I don't have any respect for that, right? If you don't prove to people that you actually trade, that you actually are profitable over the long run, and you're just a marketer, then you're only serving yourself. You're not bringing any value to the community. And if you have a platform and you're just using it to enrich yourself and not actually share any value, but you're selling stuff, I find that to be really dishonest and immoral. But if you are able to show profitability in what you do, and you also are a marketer, you sell a service, in my case, I sell software, right? I build software tools and I use my platform to sell. There's nothing wrong with doing that if you can prove profitability over the long run. Seems like that revision already has the markets moving. 10 seconds to go. Let's see what we've got for PMIs this morning. Again, Europe's was weak. Let's see if US bucks the trend or if it too is also seeing some weakness. Should be coming in just a moment. And again, the market already kind of moved ahead of time because some of the revision numbers actually dropped before the release time. All right, so we have 48.8 for manufacturing, came in exactly as expected, but they revised this number higher. And there is services coming in strong here this morning. So services numbers strong. There goes the industrial heavy S&P 500, NASDAQ, Dow Jones. Look at that. Russell also seeing some upside move. I mean, these aren't huge moves. S&P is up 0.34% for the day, but went from red to green here this morning. So a bit of a reversal on the day. S&P up 0.4%, NASDAQ 0.3%, and the Russell just absolutely flying here, up 1.1% just about this morning. And yeah, this is going to be a little bit of a muting effect for gold, most likely, just because, again, strong economic data out of the US may reverse some of the uncertainties that came with slow European numbers. At least right now, it does still seem to be a favor the US trade across the board. US stocks, US dollar, all seem to be kind of dominant at this time compared to other places. I mean, clearly I'm long some Chinese stocks, which are not feeling this same enthusiasm today, of course. And we'll see how that plays out. Quite a bit of market volatility here recently, but stocks mostly have been shrugging bad news off and just continuing to push higher. I know we like to both talk about the indices quite a bit. So what are your thoughts with NASDAQ getting close again to that high? The Dow Jones very close to its all-time high as well. What are your thoughts right now on indices?
Yes, I was focusing actually on NASDAQ and US 30, and they seem to be performing very well. But this week, I think US 30 was performing very great, especially from NVIDIA. It performed very good, but I think we did not really see the overall push because I was expecting a bigger move. But I think maybe today we might close the market higher. It's better than a few weeks ago.
Yeah, it's been interesting just to see the even though you've had some ugly news mixed in there, right? The uncertainty about what's happening in Ukraine, despite some of that shaking up the markets, it doesn't seem like it had enough to really keep things down. The other bad news event that happened this week, at least in the eyes of the market, was the uncertainty around Google, right? The Department of Justice talking about them needing to sell off Chrome, and perhaps that shakes things up a little bit for big tech stocks, because of course those sorts of rulings can hurt their business models to a degree. So I don't know, some uncertainty on that front as well. But do you think that overall, going into 2025, do you think it's something where we see this ramp up into the end of the year, and then 2025 we see corrections, pullbacks, periods of consolidation? Or do you think it could just be strong and then strong again in 2025? Do you see any sort of cool down in the coming weeks or months?
For now, I don't really see that. I think the overall push coming from now, I think we are going to see some overall push to the upside. Maybe we might have some reversals here and there, but I think similar to what we saw from 2020, 2021, especially because Trump is going to be in the office. If maybe he can try maybe to cool off some of the geopolitics or tensions, I think everyone from those countries, they will be focusing on stocks. Obviously, I think we will see businesses or companies performing very well. Yeah, unfortunately, from Google, they have this issues or fines from DOJ, but I think it happens like almost every month from these tech companies. Last month, I think it was April, they have to pay 10 billion, but in Europe. So it seems like they have all these issues, but at the end of the day, that if they fine them, I think it's going to be a smaller amount, maybe 2 billion, 10 billion. So that is actually nothing for them. So, but the overall push, I see a quite bigger move. I think the market is happy.
Yeah, and I know another one is there was some news that Amazon might be getting some pushback from Europe, and just in terms of some restrictions. I'm not exactly sure on it, but let's see if we can find anything on that. Yeah, EU's Digital Markets Act next year. Amazon potentially likely investigation. So I don't know. You always sort of have this little bit of pushback from governments, not just in the U.S., but in places like Europe, etc. So it seems to always be a bit of a story, but as you mentioned, maybe not a huge deal for these companies, which have so much money, they can sort of just pay off these events, get past them, and continue to do business and make tremendously more money. So another thing that's up is Bitcoin. I mean, maybe not today, down 1.2% here, but you look back a few weeks, my goodness, Bitcoin is absolutely going parabolic. What do you think on this one, Kenzo? Does Bitcoin, as you mentioned, the Trump administration taking office is an interesting. It changes a lot of things for a lot of different places. But one thing for sure, clearly, with a 30 plus 40% move following the announcement of Donald Trump's victory, has Bitcoin just flying high here. Is that set to continue? Are we going to see with Elon Musk and Donald Trump their sort of cohort, crypto just run hot like it did back in 2020, 2021?
Yeah, I think it will. I think it will continue, especially with Musk there. We know that mostly is positive when it comes to crypto. So I think this move might still be quite small comparing to other moves that we saw before. So I think by the end of the year, we will be on 100 plus. I'm expecting to see some serious moves. If maybe they are not going to be specifically on Bitcoin, obviously other cryptos, they will also gain something. But I see it as a positive thing because few months ago, I also saw Trump on his campaign. He was also talking about cryptos and stuff like that. So I think if he can go soft on the regulations and stuff, we might see the overall industry on the crypto going like seriously crazy.
Yeah, it is crazy times to think that there is even a president at this point acknowledging its existence and giving some validation to it. It is quite a change in times. Not to mention, I think that is the kind of thing, that is the kind of event or change that would get price. I mean, obviously now speaking with price near 100,000, that does seem like the sort of catalyst that could take it to 100,000 and beyond is validation from well, arguably the most powerful role on the planet. So it is pretty crazy just to see it all happening. I mean, years ago, I would not have expected for that to be the case at this point, but here we are. The future is very hard to predict, and clearly that is why. I mean, many people who have disliked Bitcoin or crypto in general for many years are probably very shocked by this. And I'm not by any means the biggest crypto person in the world, but I'm trading this momentum. It is a very momentum heavy instrument. Do you trade it at all, Kinza? Are you watching it for any trades, or do you just kind of hold any, or what are your ways of playing Bitcoin, if any?
Yeah, not much. I used to actually, I can say I hold some few coins on Doge because it's quite cheap and it also moves very quick. So I think Doge, as also Elon Musk creating this department, I think is going to be like the topic. So not much on Bitcoin. I think I missed much, especially around this level, the time it was breaking out. So I thought maybe it was going to play around, but just as this thing flight, so I did not really want to chase the move. So I just tried to buy and hold some smaller coins actually on Doge and other ones.
Okay, yeah, fair enough. I mean, Dogecoin also going crazy here at 39 cents here, which doesn't sound like a lot, but when you consider the fact that it went down as low as 5 cents or 6 cents and is now up to, well, at one point recently, 44 cents, it's crazy just to see that come into play. And again, the people who get all up in arms about is crypto, it's not worth anything, it's not real money, it's not. I mean, to be fair, anything that is valued at a certain place in a marketplace is worth what people are willing to pay for it. That is, you ask why is something worth a certain amount? It's because that's why people pay for it, right? Sometimes people will complain about certain prices, but prices in free markets are priced based on what people are willing to pay for it. And crypto, whether you like it or dislike it, and that may change, you may think, oh, that's not always going to be the case, but for now, it is clear people want crypto. They want the technology. They want the idea of a sound money storage. I mean, really, I do think gold is the ultimate sound money storage, but it seems crypto is rising in popularity once again and has been doing so for like the last decade.
I see some of you want to go over DCA, so I will happily do that. But just before I do, I'll show you my recent MyFXBook, just so you know I'm not one of those, one of those influencers or marketers or whatever. So, I could usually refreshing it, just making sure it's not inspect elemented. It's only a new one because I've only just moved to MetaTrader since September. So you can see, 4% this month, 1.69% October, 2.35 in September. So I'm not doing crazy returns, but they are consistent and they are stable. So there you go. So let's get into some dollar cost averaging content. So anyway, sorry, it's already stuttering. The idea of dollar cost averaging is essentially building a position over a period of time. So rather than having, let's say here, I was going to sell euro dollar, rather than having a hard stop loss at the previous high or 20 pips, 50 pips, whatever, however you measure your stop losses, that's essentially not what you do with dollar cost averaging. You will not have a stop loss, and generally you won't have a take profit either. So essentially just adding in, and you can only do this when you have a very strong idea for a trade. So for example, I'm not going to now go into gold and start selling because I don't have a reason to do that. Whereas with euro dollar, it's been a very clear trade, especially since sort of August, September. It's been a brain dead market. Essentially, all you had to do was click sell and you would have made money. And that's what I did. So you can see, what I do essentially is I will sell this market. It doesn't really matter where price is. I don't care, as long as we're not at somewhere crazy low where I'd be taking profits. As long as it's at a relatively decent price, I'm going to sell that market. So if we look here, we had a sell position that closed out because I re-entered another sell at a slightly better price. Then we sell, take profits. Now some trades will end up actually being a loss, but the higher positions make up for that loss and give the trade profit. So you can see this is when I started building a much more or a much bigger position. So I sold here, had a pullback, so I sold again. And this actually comes into play with a lot of psychology. I get messages sometimes on stream and private messages as well saying, you know, how do you deal with psychology? And normally I'll say it's a load of rubbish, because the reason you have bad psychology is because you don't know what you're doing. For example, if you're driving a car, you're not going to be worried about, oh no, am I going to turn left or right? No, because you have a map, you know where you're going, you have sat nav, you know the area. It's, you know, you're not going to worry about that. And it's the same as trading. So essentially selling all of these pullbacks, you can see closed out another position here for a loss, but that's so I could then enter at a better price and mitigate some risk. Again here, took a loss, added in another position, and then eventually ended up taking profits. And then again, you can see I did the same thing down here, actually, when I was in the back of the stream or waiting to come on stream. Took some small trades here, just scalps. I'll show you one more example, and this one will be quite quick, and then we'll go into some charts. Let me just find it here. Where is it? Give me a second. It might not be on there. Let's go New Zealand, US dollar. Oh, it must be. Am I being blind? I can't find it here. I'll just show you on TradingView. You're gonna have to take my word for it that I actually did take the trade. So yeah, same thing here, but this was more of a scale-in rather than a DCA, but it's the same idea. Essentially, you have a bias, you take the trade, you scale into the trade, whether it's in positive or negative, and then you continue this run down. Now, as Nick said just before I came on, I've been very bearish on euro dollar for a long time, and that's because I had good reason to. It's not a case of, you know, we've had a 5-minute break of structure or the 1 hour's trending to the downside or whatever. So if we look at what's actually going on with Europe and the US, so this is just a brief breakdown I did this morning. So if we have a look, the euro remains under pressure due to geopolitical concerns such as escalating Ukraine conflict and weaker economic indicators like soft PMI data. Energy costs, especially natural gas, continue to impact the eurozone, with investors inventories dipping below their 5-year average. This kept Euro USD subdued. Then if we look at the dollar, we've got the US dollar remains strong, supported by robust yields and limited pricing for a December Fed rate cut. The market's focus on geopolitical risks and stable macroeconomic outlook further bolsters the dollar's safe haven status. The dollar DXY trading in the range of 106 to 107. So there you go. I mean, we've been doing this for months. So we built this trade idea. So that's what I'm saying. It's not something I would suggest anyone goes and just starts placing trades just because they want to. If you are going to look into DCA or you are going to place DCA trades, either have a very strict mechanical, systemized, back-tested thing. So it'd be more a case of just capitalizing on something like a quant would do, or you would do it off fundamentals like I do. But you would have to have, like I said, a very strong reason to do it. So the dollar finally broken above 107, which is beautiful news. Let's say euro dollar is going to parity. That's kind of my conviction at the moment. So parity is essentially just the 1 level. So when euro dollar gets to 1, that essentially means 1 euro is equal to $1 and vice versa. So let's see on the daily chart. There was a report, I think it was Morgan Stanley or Goldman Sachs, it was one of the two. They said that we could see the 0.95 level get hit on euro dollar, which was the previous low over here from September 2022. So don't start counting out euro dollar just because it's a low price. It's a case of it's at a low price because it deserves to be there. So essentially what I'm doing on euro dollar is waiting for any type of pullback I can get, and then I'll just keep selling, because there is no supportive data. There's no reason anyone should buy the euro right now. Dollar should keep flying. Yes, I don't see anything standing in the way of the dollar, other than sort of natural pullbacks. We've just broken a key level, so we might see a pullback here, whether it's just a retest 107 or a slightly deeper pullback. But overall, yeah, I stay bullish on the dollar.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button, or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.